The worst thing that's happened to this industry in the last 10 years is the fact that there's been a lot of failed projects.
There is a lot of scope in terms of expansion of supply chain finance beyond really the first tier suppliers.
First of all, I love the fact that the missions are aligned between your new company and what we do, our tagline, as well as supply chain finance that works.
Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance.
Hello, everybody. And today we are going to cover supply chain finance, but we want to look at it from a perspective of how can this move from more of a niche solution into really scaling. I'm talking 10x type scaling. And I have a thesis that I've come in today, but I've got two experts here with me who I'll introduce shortly. So in all true kind of innovation practitioner way, I'm very happy for it to be disproved, but I'm thinking we can cover it in three main themes all around deep tech, deep tier, and deep impact. So bear with us, but I first want to introduce the two guests I've got here. We've got Alex from Finverity. Alex, you want to say a few words, introduce yourself?
Absolutely. Thank you, Merisa. My name is Alex. I'm one of the founders of Finverity. My background is JP Morgan, BNP Paribas, many things other than trade, realistically. But for the last 8.5 years, been building technology for banks across the world, across 14 countries, for them to operate SCF at scale.
Excellent, Alex. I've also got Chetan with me. Chetan?
Thanks, Merisa. Hi, I'm Chetan. I am the supply chain finance lead in the ADB's supply chain finance division. Having worked previously for over 20 years across various international banks in the trade and supply chain finance space, notably being in JP Morgan, Standard Chartered, and HSBC, and also a short stint with a fintech. And thank you so much for having me here.
Excellent. A tiny bit about myself before we dive straight into the topics. So I have spent over 18 years across three different banks, Citi, Lloyds, and Revolut. And I've just started my own consulting, Digital Trade Works. Our mission is in the name of the company. And I'm extremely focused and excited to work with fintechs, banks, and also corporates who have ambitious trade digitalization goals. And supply chain finance is one of my favorite products because it's a very win-win tool. But I have big expectations about where it can be. And I see it as very different to what it is at the moment. So we would love to have a chat today around what does it take to get supply chain finance into the hands of more companies, more SMEs, deeper down the supply chain, into the suppliers of suppliers as well. And how do we 10x the impact that supply chain finance has for banks, for platform providers, but especially for corporates who use the solution. So my first topic, I'm going to pick deep tech. So in deep tech, I'm talking about breakthroughs rather than enhancements, so not just rejigging how the platform looks, but real big breakthroughs. And I think today the art of the possible is so different with tech to how it was even 2-3 years ago. And Alex, you're nodding, so I'm sure you'll want to chip in on this one as well. But my thesis is, with what's available today, and I'm talking about, of course, AI, machine learning, but also the breakthroughs in digital identity, et cetera. If you had the luxury of building from scratch today, you could build it so differently. But even if you are an established player here, you should look at it quite differently as well, building blocks. So not just looking at the technologies per se, but what the real world applications could be with deep tech. We're looking at data-driven risk scoring. We're looking at fraud prevention engines, et cetera. There's so much of benefits, but also considerations of getting this right for supply chain finance. And I wanted to invite Alex first to maybe give us a bit of a deeper dive into one of the AI use cases that you might be looking at Finverity.
I'll try to limit only to AI use cases. First of all, I love the fact that the missions are aligned between your new company and what we do, our tagline, as well as supply chain finance that works. Because it's this idea of, it's been around for a very long time and no one's actually fully cracked it up and down the chain. But I digress. So coming back to the point, AI specifically, we've just seen the MIT report a couple of weeks ago coming out, which stated that 95% of investments in AI failed to make any kind of return on investment whatsoever, right? I think that's as far away from the truth as possible. I'll split this into what we have done and what we are doing, with the caveat that some of the things we are doing are possibly going to fail because we're effectively creating things out of thin air. So what we have done, we have the ability now to streamline onboarding of suppliers in a supply chain finance program. And when I say streamline, I mean 95% automate with AI. So let's just imagine that moment. You're a big bank. You've just won an anchor client. Everyone in the office is celebrating, other than the compliance folks and the sales folks that are now going to have to literally call up and onboard 7,000 suppliers across 10 countries. How do you do that? And traditionally, it's been email and call, maybe visit. What we've done with AI there is it's actually 3 separate AI agents, but it's number 1, get the data from the anchor client, and do not force the anchor client to give it to you in a specific format, because guess what? They're busy people and they've got stuff to do. So the AI there is a very basic mapping exercise. It will take the data in, process it, and transfer it, or let's say rewrite it in the data structure of the bank. Great. Step 2 then is the second AI agent would use that data, which is supplier email, supplier name, supplier information, maybe their website, etc., to draft a sequence of personalized emails that it would send to those suppliers saying, hey, have you ever heard of supply chain finance? Do you want to get paid early? Are you interested, not interested? Remind me later, right? Like trying to create the most easy format to consume for them to say, I want in or leave me alone.
And is this somehow tailored for?
100% personalized. What e-commerce folks did or do to turbocharge B2C sales, we used exactly the same concept in doing that for supplier onboarding. And then step 3 is, now with the caveat, between step 2 and step 3, what you'd expect is a salesperson to call the supplier that says, I'm interested, as soon as possible. But if they fail to do that, the third agent would create a landing page so that the supplier could actually continue their digital journey, end up on a landing page, press register now, or get some more information, keep him warm, make him feel like he's part of an actual journey rather than, I have no idea what I'm waiting for. So that's what we've done. What we're trying to do is a lot more difficult than that. We're effectively using a mixture of things. You mentioned AI and ML, which are very different, so thank you. We're using AI, we're using ML, we're using OCR, and a few other buzzwords to create a fraud prevention tool that will enable all sorts of different fraud. When I say all sorts of fraud, I mean financial fraud, I mean behavioral fraud, I mean collusion, and all sorts of different things to be tracked easier. The problem with statements like this is no one really knows how it's tracked today or how much of it really happens today. So it's going to take a long time for us to get data sets to be able to say if it works. But early days, promising.
Super important. You look at risk, yes, there's credit risk, but a huge part of supply chain finance, especially when you go down deeper tiers, et cetera, is all around fraud prevention. So definitely worth exploring.
If I can add one more thing to this, that it was absolutely incredibly mind-blowing to me. We did a roundtable with quite a few of the very successful banks in the UK in the receivable space. And I could have never guessed the number one indicator for them for fraud was the fact that the owner or the founder or the promoter of a business would have randomly logged in at a very different time compared to what his colleagues would normally do from finance, yes, and uploaded a set of invoices.
Exactly.
And it's mind-blowing because effectively what's happening is he's terrified that he maybe can't pay his staff or that they're having financial difficulty. He doesn't want the CFO, the treasurer, the controller to know. So he would, as the authorized signatory of the company, actually go ahead and try to fund these invoices. This is what I mean by behavioral changes. If a company's CFO is always uploading and now the owner comes and does it, that's probably bad news.
Yeah, that's one example. There are at least 100 of these different ones. And then with technology, it's able to actually, it's more a science than an art to get all of this in a very efficient way kind of tracked and checked on an ongoing basis. I spend a bit of my time just deep diving into the whole world of fraud and kind of writing a lot of requirements in that space. What would have been so complex to have stood up 3 years ago is actually quite simple to get it up. So I guess my challenge to you at Finverity is, can you build that sooner than later with all the tools that are available? But as you say, you try fast and pivot in that space. I think you're one of the luckier fintechs who you built your solution not that long ago compared to some others who probably have their core systems built even longer ago. But I challenge everybody to continuously innovate in that space. So enough on tech. Shall we move on to topic number 2? Deep tier. So here, my thinking was to scale supply chain finance, it has to go beyond just the buyer-supplier relationship. It's got to go at looking into financing the chain, as we're calling it. And then we definitely need to challenge ourselves that if the anchor buyer has 10,000 suppliers, how many of those are actually know that they've got the opportunity to get paid in advance, et cetera, through the program? And then beyond those 10,000 as well, it's the suppliers of those suppliers going into the next tiers. I know this is very early space, but ADB is one of the innovators and the big proponents in this space to say, look, if we want to help finance SMEs, then we have to really look at this. So Chetan, I wanted to ask you if you wanted to elaborate a little bit about what are MDBs and in particular ADB doing to innovate in this space and get banks excited and also interested to start executing, to start launching some deep tier supply chain finance programs.
That's a very interesting one, Merisa. There is a lot of scope in terms of expansion of supply chain finance beyond really the first tier suppliers. There are 2 aspects that we've seen, right, since you mentioned. One is the long tail, as we call it, which tends to get ignored by most banks because the cost of onboarding, I think to the point that Alex said, the cost of onboarding a supplier is high and you'd want to just typically onboard the top tier suppliers. So one aspect really is how do you finance the tail? How do you get the tail onto the program? Then comes the next one is how do you go beyond just the tier 1 suppliers? The tier 1 suppliers do tend to be better financed across most of these programs. How do you go below that? Because ultimately, at the end of the day, bulk of the business for any economy comes from the SME, MSME segment, and they're the ones who don't have access to finance. Supply chain, as we've seen it, has been the perfect tool to be able to provide financing to the SME segments. So we'd authored a couple of papers between ADB and BAF on deep tier supply chain finance. We're working with a number of bank partners to get them on board a solution. Now, deep tier supply chain finance today does exist in markets, China being the best example of it, but they're all local currency, local markets. What we're trying to do is, how do we go across borders? How do we look at doing deep tier supply chain finance, which covers more than a single geography? Potentially, you could also have a currency impact where the original currency is dollars, but as you go further down the chain, it converts to local currencies. The biggest challenge that we see in that is from a regulatory framework perspective. Today, regulations across markets are a bit fragmented. Each country does have different regulations, so we're trying to work with the regulators to see what changes need to be made to be able to facilitate deep tier supply chain finance. What we do need for that, we do need a partner bank and a partner client who's willing to go through that journey with us. And it will take time. It's not going to be a quick win, right? It's not going to be something that's quick to start and implement because you will work with regulators across multiple geographies. Yes. But we do think once we start that, once both the regulators, the companies, as well as their suppliers see the benefit as you further go down the chain, you will see this move at a much quicker pace. And I think what is going to hold all of that together is going to be technology. Does the technology exist today to be able to do that? To the point I think that Alex mentioned, one of the other challenges was KYC. The banks do certain minimum KYC on suppliers, which is fine. How do they do it? Would they need to do it on the second tier supplier or the third tier supplier? So all of that are questions that need to be addressed. So I think it looks fairly simple on a piece of paper when you draw it, but once you start going into the details, there are a lot of touch points, and that's what we're trying to work on. But yeah, we've got a few interested banks. They're definitely keen to work with us on this one. We're just trying to identify the member countries that we would need to work with, which are the 2 countries that we need, 2 or more countries that we need to start working with to see how does the second tier and maybe potentially the third and the fourth tier after that go further down.
Chetan, I'm very hopeful for this because, again, as innovation practitioner, I hate solving for I've got a good product, who's going to use it? I love solving for this is a huge pain point, and so what can solve for it? And I have spoken to corporates in my days at the banks, and this has come up time and time again. I've got buyers telling me, look, I think my suppliers are doing all right, but if you really want to help my supply chain and I want to make sure it's resilient, it's actually my suppliers of suppliers who need the financing. Right. And if I can somehow get them involved, then that would solve a lot. So they've even asked me to prioritize their suppliers over their suppliers because they said that's where real need has been. And this was, say, 5-7 years ago where maybe we're not as close to this kind of solution.
I think, yes, I completely agree. I've been speaking to banks on supply chain, corporates on supply chain finance for the last 15 plus years. Yeah. A lot has changed in that. There is a lot more collaboration that you see today as compared to in the past where everybody wanted to do everything themselves. Whether it's collaboration between banks, fintechs, the multilaterals getting in to support some of these transactions could be through liquidity, providing liquidity and guarantees, but also through working with the regulatory framework and other banks to move the market up. So clearly there is a need. It's just about getting that first deal done and then using that as a test case and moving forward.
I have to ask, we have a, let's call it, working group within ITFA on DTSCF with Paul from Orbion, with Vikrant from Crown Agents Bank, and quite a few of these guys. One of the big problems we've jumped into is how do you get the corporate anchor, the buyer, to give you an IPU for the tier 2 supplier? And do you think they will actually ever do it?
So the way we're looking at it, Alex, and that's an interesting one, right? You're looking at taking the IPO at the tier 1 and then splitting it further down the chain. So you're not looking at the corporate giving a double more than beyond what their payable is, right? So it's kind of splitting down from the first IPU on who are the suppliers, who are their suppliers, how do you get to finance them against the IPU that you've already got from the buyer. So which is where I think there is a bit of technology requirement as well, but also a bit of mindset because the tier 1 supplier effectively is saying, hey, if I've got a $100 IPU, I'm using 50 of that and the other 50 is being used for the benefit of my suppliers.
I've read your paper on the deep tier SCF and you mentioned a number of different options. So it definitely looks like there's no one size fits all. And in supply chain finance, it's very rarely one size fits all. Right. So maybe there are a few flavors and you might. But I think we should try to challenge ourselves that deep tier supply chain finance is more than just 2 supply chain finance programs separate back to back, right? You know what I mean?
It's basically spreading that network beyond just the first tier and how do you keep going deeper and deeper into that tier?
Going back in history, it turns out to be a barter at the end of the day if you think about it. And it could even have other impacts because if you do it that way and you've got this, let's call it currency, that becomes tradable. You've got the first tier of the supplier, the second tier of the suppliers, and they've got this currency where they just keep some of it, pass it on. Ends up becoming like a barter.
You could put it in that way, Alex, again. And the way I look at it, hopefully once Meliter gets fully rolled out and accepted globally, the opportunities are immense. You can use multiple underlying instruments to be able to do. So what we're trying to do now is within the framework of the regulations that exist today, how do you still try and make that happen?
Yeah, but my friends, we have to keep this super simple. So again, I'm a big proponent of it has to be simple. Once it sounds too complicated, no corporate wants to pick it up. So
no stable coins? Got it?
As long as you can sell it in one sentence. In all seriousness, I think there's definitely complexity in the background in how we actually get it up and running and build. There's going to be complexity in the structuring, in the legal framework, and then the technology. But I think to the actual users who are trying to convince to use it, it's got to be a super simple.
That's the whole idea, Merisa. That's what we're trying to do, making sure that the building blocks behind the solution are in place. Yes. So that once you start putting the solution together, all of that framework is there. So you're not questioning on that part.
Excellent.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
Okay, so that was deep tier and deep tech. So the final one I wanted to introduce was around deep impact. Impact is a very powerful word. Impact can mean many things. But the first use of the word impact that I wanted to introduce before I open it up to Alex and Chetan is around how to get it done. And in terms of what are the actions that will actually deliver results in growing this 10x. You can't try to do everything, not get anywhere. So from my perspective, I really think it's super important that if we're looking to implement and grow and scale supply chain finance and get it in the hands of more companies, et cetera, you have to really design KPIs, your milestones, and what you're tracking to say how success is achieved. You have to design them very intentionally to drive results. And in this space, as we all know, KPIs like winning a mandate is or just completing a pilot is just not enough. That's not.
We don't like proof of.
No more proof of concepts. But how do you go beyond that? So my challenge to existing providers and also new ones coming into the space is how do you design your KPIs that are incentivizing true growth and true success in this space so that they're ambitious enough but realistic to really drive and get it done. And as you're rolling out solutions, try to do it in a nimble way where it doesn't take 2-3 years to get to market. But yeah, deep impact means a few things. So I wanted to invite Chetan first in terms of advocacy, education, but maybe even kind of impact in terms of resilience and so on. Did you want to touch upon that?
Sure. That's an interesting one, Merisa. So in terms of from an ADB perspective, what we're doing is, so we essentially look at business in 3 segments, what we call as the upstream, midstream, and downstream. So downstream is what we've been doing, which is essentially providing liquidity and guarantee into some of the programs that have a developing market supplier base. But that's one part of the puzzle, right? So the other one is how do we get today's supply chain finance, as I've seen it over the last 15, 20 years, is primarily the domain of the larger international banks because of the access to the anchors that they have. How do we get other local banks, regional banks to come up the curve? So that's what we do as part of our midstream activities is we have technical assistance programs that we run with these banks to make sure that they understand the product nuances, they have the necessary credit infrastructure in place, understand the importance of technology. So essentially being able to get them ready to offer a similar solution in their markets. Then and that is again dependent on the regulatory framework in the market. If the regulatory framework doesn't exist, then we work with the regulators to take them through that journey of why supply chain finance is important, how does it help in developing their own local economy. So it's trying to make sure that from all aspects, you're covering it. So there is a fair bit of education. And on top of that will be a lot of other aspects, whether it's the digitization, things that ADB is working on. And again, we partner with a lot of MDBs in the same, so as to ensure that you have a common approach to all of this, right? So it's not just ADB is doing its own thing, IFC their own thing. So we work collectively to make sure that the agenda, because agenda for all of us is the same, markets may differ, but you're trying to do the same thing. So yes, education, advocacy is very, very important. And that's a key aspect of what we do, other than just the liquidity.
Excellent.
Can we take this out of context and just let all the banks know that Chetan has just said that if they want to digitize SCF, they will pay for it?
I didn't say we would pay for it. I'm sure we'll find enough people who may be willing to pay for it, but we do work with banks. See, the one thing I've realized having been in Singapore, you give anything for free, nobody will appreciate it.
Very true.
Very true.
Globally, internationally available.
Yeah. So you need somebody to pay, nominal amount also, then you value what you got.
Skin in the game.
Absolutely.
Excellent. And on that theme, the impact to me as well is if you don't convince the client ultimately to do anything, then nothing gets done in this space. So Alex, do you have any thoughts about the corporate demand or demand? Like how are clients asking for this to be delivered to them? Platforms, RFP versus direct, etc.
Yeah. There's 2 points here I want to just touch upon before I answer that.
Yeah.
On something you mentioned earlier. I was talking to a few of our folks here at ITFA last night. The worst thing that's happened to this industry in the last 10 years, and I'm going to start, your editorial axe might be cutting this one out, let's see, is the fact that there's been a lot of failed projects. And there's been a lot of systems that have been commissioned by banks, for example, and not deployed, which you would think, okay, is that really that dramatic? Probably not behind the scenes, but then the corporate clients who are being told by the banks, yep, we're going to launch this SCF facility for you in 2 months, 3 months, 4 months, whatever it is. They were planning for that, and then it never came. That was very impactful. So why has that happened? We're not going to get into that conversation, but that has happened frequently. And now what we're seeing is in RFPs, for example, very large corporate clients in RFPs will very intentionally say, these are the products that I'm expecting. these are the volumes that I'm expecting. These are the countries where my suppliers are. This is how I expect you to onboard my suppliers. It should not take you longer than X number of days, weeks, months, etc. You should not be asking for more than 7, 10, 15 data points. Do not call them more than 5 times, right? Like, for the first time, we're seeing this very deliberate planning of this is how much you should bother my suppliers if you would like this mandate. Now, what that does is it forces the bank into this hyper-competitive mode where it's a game of very thin margins. And I don't know how the political landscape within the banking space is going to change because of it, because I don't think the industry can handle another 3 years of failed projects. It's either you actually get it done or no more proofs of concept.
But that's good, right, isn't it? Because at the end of the day, for the industry, irrespective of what hats we wear, that will drive competition, that will drive innovation.
Yeah.
And going back to Marisa's mantra of bringing the humans of supply chain finance and actually trying to find the product that works for the market, not creating a product and trying to land it into the market.
Absolutely.
Yeah, 100%. I almost see that as an opportunity, and it's a wake-up call. You can't stay stagnant here. You can't think, oh, I've got something that works and just think that's going to be. We are in the age of very informed buyers. Mm-hmm. Even if it's for a supply chain finance program for that company, that treasurer or CFO might have come from his previous company where he knows his stuff inside out.
I had written something in ChatGPT and it gave him the whole RFP. So
Exactly. And you do the deep research, it gives you pretty good stuff. You want to fact check it, but it's pretty good. So definitely we have informed buyers, but they are then quite demanding in terms of what they're looking for. So as a provider, you need to be agile and you have to have the right platforms to be able to support that and not over promise, but you want to delight your clients as well. That's a great one. So we've looked at deep tech, we've looked at deep tier, we've even touched on deep impact. And so around the table, have I missed anything? Is there any missing ingredients in terms of what we need to look at to really 10x or more supply chain finance from what it is today?
I think there is huge scope, right? If you look at global trade, 90% is open account. Supply chain is open account. I think what you see in terms of the size of the market today is just scratching the surface.
Yes.
There is a lot more. And I think that will involve a lot more partnerships because each bank is going to have capacity constraints. Each bank is going to have credit constraints.
Yep.
And you want to grow the market, you need to partner. You can't do it just by yourself. Whether that's partnering with MDBs to help you with liquidity, whether that's partnering with different banks, working on a solution where you actually have a local bank and an international bank involved in growing the supply chain finance together.
Yeah. We're talking about partnerships, also credit risk insurance. They're absolutely great partners in this space and can really help scale some solutions. And some of them are quite tech ready to do things in a more automated way. So it's a partnerships play, it's collaboration. But I would love to have the corporates also in the room as well. And I would love to have a solution where, let's say the core is the same, but then you could tweak it so that it fits the customized needs of each corporate. So to them, it feels customized. But as an industry, to be able to offer the service, it is not overly heavy on operating expense, for example.
And I might just add here, ad break, TTP sponsored by TTP. We will be launching a guide to supply chain finance for corporates very soon. Keep your eyes peeled for that one.
Excellent.
I think that the only other thing there that is completely broken are credit models, because banks have been, since 2008, living in this world now where they do not want to take any risk, right? The risk is near zero, even in SCF, and you're still making a return. And the credit models need to slightly shift. We need to go back to taking some level of risk to be able to go deeper into the supply chain and to actually grow the amount of market share, right? Because if you look at LCs, for example, that's a much better suited business model to this level of risk versus return that we see in trade today versus SCF. SCF with that higher cost also needs to have a component of actually taking risk, which is why, in my opinion, factoring, for example, works that well, right? You're removing counterparty risk. There is a very tangible value that you as a corporate client get from the bank for engaging in factoring. In SCF, if Nestle is your buyer, do you really have any risk? No, probably not. I think we need to figure out what can we add as services or other credit-related remodeling tools to give some extra value to suppliers.
Oh, this is one of my pet topics. So Deepesh would invite me for a future one. We would totally deep dive
So you're at dinner then?
into this space. Yeah, the way underwriting is done for supply chain finance is going to be
Completely.
transformed. And if you don't do it yourself, then the digital first challengers out there is going to do it.
I mean, if you're looking at assets on a balance sheet, you're already off. Yeah, pretty much.
Amazing. So great. So audience, you've talked about deep tier, deep tech, and deep impact. And if we've missed anything or if this sparks anything, feel free to drop us a note. Or I'd love to hear your thoughts on this.
All the deeps in one short breakfast. That was Merisa Lee Gimpel, our supply chain finance lead of the global advisory panel of TTP at our breakfast podcast in Singapore at the ITFA Trade and Forfeiting Conference. Thank you, Merisa. Thank you, Alex. Thank you, Chetan.
Thank you.
Thank you, Deepak.
Thank you, Jitesh.
And don't forget to follow Trade Treasury Payments on your favorite podcast platform.
Thanks for listening.